In this video, we are going to look how you can easily make $100 plus a day trading crypto. That includes Bitcoin, trading altcoins as well. It's based on what I've learned over the years, how I'm now making way more than $100 a day, but $100 a day plus is a great way to start. So guys, let's get straight into this one without any further delay. Let's get started. So before we get started actually trading on our crypto trading exchange, of course, we need to talk about analysis, devising a strategy, because without a strategy, without a plan, you're doomed to fail, and making any money per day or week trading cryptocurrency is going to be a tall order. So first up, support and resistance, arguably the most important thing when it comes down to trading, to spotting a range. Now, just by using the naked eye here, we can see on this example chart, this is the 8-hour Bitcoin USD chart, we can clearly see that there is resistance going through at this level. See how the candle bodies meet this resistance line. Nothing had broken through at this point, and this price point here as an example is 28,700. We got these wicks through, they're known as wicks, but we weren't able to break out of this until this point here. The same is to be said about the support. We can see with the naked eye, there is a support level here, approximately speaking, at 26,900. We can straighten it up here, and we can see that no candle body closed outside of this zone. So we know we have support in this example at 26,900. We have resistance at 28,700. And this would have presented a great opportunity to buy here or short here. And when you break out of a pattern, that is a great time to enter a position. That's when I would be going on to someone like Bybit, opening up a trade, but more on that a bit later. So that brings us to trading patterns. Where you have support and resistance, you also have patterns within this that indicate that something's going to happen, i.e. the price go up or go down. When you're looking at a chart, it's simply indicating human psychology of buyers and sellers, essentially greed and fear, or fear and greed. Now, in this example, I'll show you one of my favorite patterns, or the most familiar patterns I use. And this is an inverted head and shoulders pattern. This is a bullish pattern. So with an inverted head and shoulders pattern, you have a neckline, which you can see here in the same example, we had the resistance. You can also see that we have a shoulder, a head, and another shoulder. Now, 7-8 times out of 10, you're going to get a break to the upside when you see a pattern like this. And the target is the depth of the inverse head and shoulders pattern from the breakout point, and typically you're going to reach all the way to the target. In this example, we didn't quite meet that target, but we did have a huge breakout from this resistance in terms of percentages here of 6.4%. So still a very, very nice trade. So moving on to another familiar pattern that I use every day in my trading. This is known as a wedge, and you can see it a bit more clearly on these cheat sheets. Generally speaking, if you have a downward falling wedge, that's bullish. If you have an upward falling wedge, that's typically bearish. I'm going to put a link to this Forex chart pattern cheat sheet, but just because it's Forex, it works just the same for cryptocurrency. Now, I showed you some bullish patterns, but there are bearish ones as well, as you can see in this cheat sheet. Like I said, link is down below for this, so you can study it in your own time. So now we've learned a bit more about support, resistance, patterns to trade. What we then need to look at is indicators. Now, indicators are a great tool to use in addition to our support and resistance and chart patterns in order to give us confluence. Confluence is where it gives us confirmation if something's a good trade or not. So first up, let's look at the MA ribbon. This is also known as a moving average. So I'm going to toggle that on here, and this will change depending on the time frame that you're looking at. So in this example, we're on the 8-hour chart, and we can see that we're above all the moving averages. However, if you were to go into the small time frame, we can see Bitcoin has started to come down in price here. It's likely we're going to be below the moving average. So if I go right into the 30-minute chart here, you can see that we're making our way into the moving average ribbon. The different colors represent different periods of time. So in this example, we're using the 20-day the 50-day, the 100, and the 200-day, which is the most popular, which is what most traders use. If you go right down into the 5-minute chart, for example, you can see we are under the moving average. If you're below the moving average, it's a better idea to accept the trend as your friend to the end and short. If you were above it, like in the case of the bigger time frame, we're more bullish. You can see we're above the moving average, and this could also act as a great support zone for picking up more buy orders. But again, more on the orders and risk to reward ratio later. But in summary, moving average is a great way and a great indicator to see if we are bullish or bearish. So the next indicator I want to show you is RSI, the relative strength index. This tells you and shows you how overbought something is on a time frame, or how underbought it is. Now, in the case of the 8-hour chart for Bitcoin here, you can see that we are pretty much overbought on this time frame. We're above the average, and on a relative strength index indicator chart, you are going to have between 30 and 70. It can go lower and higher, but this is generally the range that it will stay in, particularly on the bigger time frames. Now, if something is above 70, this gives confluence of more of a shorting opportunity. If it's above 30, generally it means more of a long opportunity. Again, it's all dependent on the time frame. So for example, if I was to go into the 5-minute chart here, you can see that we're not overbought, we're actually underbought, and we're just breaking above this moving average here on the RSI. So potentially a good long opportunity if you're trading the smaller time frames. Time frames are very, very important, and the relative strength index is a great indicator whether something is of good value to buy or indeed sell. Lastly, on the indicators, I'm going to up the notch on the professionalism a little bit. This is known as the Fibonacci retracement. Now, the fib levels give us a strong indication of where price should come to, whether it be to the upside or the downside. So I'm going to show you again, this is time frame dependent. This is the 1-hour chart. What you want to look for is a low on a chart and a high. So you can see that there's a low here at 28,200. And there's a high here at 30,574. Using a fib level, Fibonacci retracement, we can see where the price is likely to fall to in support. So we drag from the low to the high, and we can see we have a golden pocket here, the golden ratio also known as. And we can see that between $28,993 and $29,095 is the likely support level. Fibonacci retracement is an excellent tool, but it shouldn't be used alone, and I must say it is a little bit more intermediate. If you want to learn more about Fibonacci retracement levels, do make sure you'll subscribe to the channel, because I use them a lot in my daily TA. So this brings us on to probably the most important part of the video, and if you're still watching to this point, well done. You obviously are serious about making money in trading crypto. Now, this is the risk to reward ratio. In this example, let me show you about the risk to reward. So from the entry point where you want to enter a trade to the target, and we knew that our target is somewhere in that region of where the price action went to. So what we want to do is do our risk to reward, and bear in mind this is before it's happened, so we don't know exactly. So we're measuring to the breakout, but we want to have our stop loss under the support of this triangle, of this resistance. So if we have our stop loss in this example at $27,750, and I'll take profit up at $30,565, we know using this tool that we have a 3.22 risk to reward ratio, which is excellent. And we know that there's a 7.5% upside and just a 2.34% upside. So if we use the 10x leverage trade here, the potential gain is 75%, the potential loss is 23.4%. So an overall good trade. This trade isn't guaranteed to happen before of hindsight, obviously, but the great thing is we know that this chart and this pattern breaks to the upside more often than not. So we know that even if this one out of 3 times, we're going to be in profit as long-term trading. Trading is all about correct money and risk management. This is risk to rewarding trade. If you want to risk your money correctly as well, you should only be using a small percentage of your overall trade portfolio per trade. So for example, if you have $1,000 in your account, I don't recommend using any more than 5% exposure per trade. And we'll be working out later in this video how you work out what you should be using as margin, so you're not losing more than what your your risk level is per trade. So in order to make $100 a day trading crypto, unless you have tens, maybe even hundreds of thousands to play with, the only two real ways of doing this is by using derivatives, futures trading. The benefit of using derivatives is you can use leverage and you can also short, so you can bet on the market going down. Trading derivatives futures does carry more risk, I will make that clear. However, when done responsibly using correct risk money management, which I'm going to show you in this video, there is great opportunities to make profit trading, but of course risk as well. So let's look further. Now there's two different options when it comes down to leverage. You have cross and you have isolated. Cross can come in handy for more experienced traders, but to get started, I would simply select isolated. Then it comes down to selecting your leverage. 𝗖𝗵𝗽 allows you to trade up to 100x leverage. I wouldn't necessarily advise 100x because that is extremely risky and your liquidation price is going to be much nearer to your entry price. But of course, as you get into trading and learn more about the money risk management side of it, you can decide what leverage to utilize in your trading. A sensible place to start is really anywhere from 5x up to sort of 20x on Bitcoin. For more volatile coins like Ethereum or altcoins, I wouldn't really go over 10x leverage. Again, it's down to the individual's risk tolerance. And of course, make sure you do your due diligence on the money risk management side, because leverage can be an amazing tool, could be your best friend or your worst enemy. So treat it with responsibility. Make sure you'll subscribe for future videos as well, where I talk about daily technical analysis, and feel free to check out any one of these videos on screen before you go. Thanks for joining me, guys. See you on another video very soon, and good luck trading.